Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is down about 0.6% there. On the S&P Nasdaq, down about 1.1%. Semiconductor got hit, 3% negative. Dow, pretty much flat. Russell 2000 down 2%. Transport 0.7 along with the banks. Energy is green along with the healthcare and home builders. Looks like our biotech is 1.3% negative. Home builders got hit. We got 4% negative on home builders today. Retail also got hit, 5% almost negative there. Emerging market down a little bit. Bitcoin down. Gold, silver, miners. These guys are green today. 1% or so. Dollar down. Oil up. Treasury bond up. VIX popped a little bit. Let's do the S&P 500 ETF. Spider. 65-minute chart here. So this is where we closed yesterday, and it looks like we see that gap down, and this is where we opened up today. So we didn't see a gap up. That's what bulls needed to see. So it looks like the bears are not gonna make things easy for the bulls. We didn't see any kind of a shenanigan, kind of a panicky, like a fearful type of move to stir up the bulls. It was pretty much kind of a lethargic deterioration throughout the day. You can see we slowly kind of grinded lower, closing the day 0.6%. Nothing bloody about that. It's just because the market has been up almost every single day in the last 2-3 weeks. This kind of a decline isn't going to scare anybody out. And so we deteriorated throughout the day, and then look at what happened, right? We talked about that quadruple support area. First of all, you can see my rising pivot right on that vicinity, right? Coinciding with the rising uptrend support right on that vicinity, which we talked about. The gap area right on that vicinity. And with that, we threw a hammer candle. That's a textbook hammer, because you can see it has a shaved top, right? That's a perfect form of a textbook hammer candle there. It is not a coincidence. It is not a mistake. It is not an accident. It's not a random occurrence that when we did see the buyers bring it up, buyers were able to bring it right above my micro-term moving average. You can see my micro-term here, micro-term there, micro-term here, and here, and here, and here. Right, ever since what is that? March 24th, bulls were not able to bring the price down below my micro-term moving average. That's the dotted green moving average there on a closing basis. And you can see we in the intra-hour, bears are coming down to fill the entirety of that up gap. They left a little bit, about 20% or so, and that's also in favor of the buyer. They need to fill the entirety of that gap. Keep in mind, same thing happened here. Remember, when bulls here got up and filled the little bit of that and not the entirety of it, you can see bears had a little bit of that, opportunity to bring the price down, at least have the red day today. But with that decline, not a strong enough decline. Bulls were able to kind of prop itself up on that support area, gap area, rising pivot, rising support, and closed above my micro-term moving average with the hammer candle. And you say, what does that mean? I mean, what does that all mean though? Well, it means that pressure, the momentum, the sentiment, the trend is still up. Benefit of the doubt still goes to the buyers. We still got this short-term uptrend going on here, higher lows, higher highs. Even with this kind of a lethargic pullback deterioration we've seen today, we can kind of look at that as some sort of a bull flagging pattern. But with all kinds of with any candlestick analysis, we know that one day move, we can't say that reversal is in place. What we do need to see a follow through. And you might ask, what does a follow through look like? Well, you can see there's a similar look right here. So you can see that downturn through that, Dragonfly Doji right on that micro-term moving average there. And then next hour, what happened? Through that bullish follow through, there's that neckline right here. We got above it, closed above it, and then we saw about 2 days of bullish run. So that's what follow through looks like. So what we want to see, you see that red candle there, which are a little micro term pivot. We want to see a candle looking like this on the first hour. So if you can stay above for the first 2 hours tomorrow, stay above about 459.50 with the confident looking candle, right? I think there's a good chance that bulls are going to go after filling this gap. If not tomorrow, sometime, maybe tomorrow and Friday, right? So that's what bulls are looking for, that follow through off of that hammer candle that was just formed right above that micro-term moving average after finding support on the rising supports and the gap area, and that bear's not able to fill the entirety of the up gap. It looks like definitely buyers stepped up here. Bulls, obviously, for bears, obviously, momentum is still favoring the bulls. You still need to see some sort of a shenanigan gap down, shenanigan bloodbath. You want to kill this momentum and then kill all that uptrend shenanigans that we're dealing with right here. Or I'll call it a fiasco. This uptrend fiasco we've been dealing with the last 2 weeks. What bears need to see, we need to see a shenanigan gap down or shenanigan bloodbath, just like something like this. Bears gotta start acting like bears, right? Just bring it down. I want to see some massive blood, like 2% down day. Let bulls tremble a little bit. That's the only way you let bulls kind of get that fear coming back into the market, because it's a little declines like this, 6% or 0.6%, slightly down. All it's gonna do is bulls gonna just laugh at it, and bulls gonna try to bring it right back. Let's check out that oscillator and see if we're gonna extract any more information. So that oscillator actually crossed down now. And so looking kind of peculiar here. So we kind of, we've been analyzing this market for the last, since the COVID lows, right? I started this daily update videos since the COVID lows, like April of 2020, something like that. We've seen pancake pattern at the top of the ceiling, which does a bullish signal. This is new, because we're seeing pancake, but we're not seeing that at the top of his band, but we're seeing rather like in the middle of nowhere, sort of. So this could be, you know why? You know what it is? You know why this is? It just came to me. You know why this is? Is because of this oscillator giving respect to the boss bear. Risk this much, because again, if you've been following me, a lot of you guys are. A lot of you guys been following me since the COVID lows, as I've been analyzing this market every single day and looking at the oscillator. This is first time. The oscillators know that there's that down gap that regards certain veneration. Is just because, why though? You say, well, who cares about that down gap, ladies and gentlemen? When last time we saw that down gap happening, well, things got extremely bloody. You guys remember what happened? Tanked for like month and a half straight. Made bulls tremble in fear and panic. They made their life miserable. And all that, those boss bears who commenced that move, they're still hanging on. They're wounded. You know what I'm saying? They don't have like the same confidence as they did in February. But I think the oscillator is kind of giving a little bit of respect to that the boss bears. So this is a level that this oscillator can see a tankage if we do see bears bring it down. If we see a failure here on the oscillator, this thing started coming down, this could actually be another bearish divergence. See, you can see we can do it like this. We can draw that line right there, and I can draw this like this. So that still could be extended bearish divergence. Again, this is another like now triple, like, you know, quadruple peak. It's not going to be as strong. However, because there was some time that it took, because of this move right here, I think this one actually could be strong if it actually plays out. So let's say the oscillator actually comes back down, and then we see a price to match it. But let's say oscillator start to deteriorate, but then we see the, you know, the price start to consolidate sideways. That's gonna favor the buyers. All the buyers are doing biding his time, letting the oscillator reset, and then it's gonna break out, and then it's gonna do this. So if the oscillator and the price go together in a furious manner, you see the boss bears attacking hard in the next couple days. I could see 440s on the S&P, on the spider, right? So I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and good luck trading tomorrow.